On this example of EURJPY, notice the failed breakout at the low of the current week. Then you also get a first green day after that large dumping day. And then today, on Friday, we had non-farm payrolls in the New York session, waiting for that news event to play out. You can see the pattern that is formed. There's a nice little parabolic channel. They attempt to come out first to the top side. That's the first bounce. Then they stop hunt back down to the bottom of the channel, and that gives me a green light to take this trade. It goes vertical back to the high of the day, not as quite as far as I was expecting. I was expecting a 25 pip extension outside of that range. It didn't quite make it there, and then the end of the hour was approaching, coming into that 9 to 10 o'clock hour, and I closed the trade. Day 2, coming after day 1, giving you that failed breakout at the high or the low of the current week, allows you the opportunity to look for very large trend trades or reversals off of the low and the high of the week. This is the different scenarios that you can receive when you get a day 1 of the 3-day cycle coming into day 2, which is the day that you would look to take a day 2 trade. Day 1 of the 3-day cycle becomes a first red or a first green day, so in combination with some kind of signal day. On day 2, if I have a first red day, I'm looking for a sell high opportunity based off of different first red day scenarios. If you want a first red day, first green day video, I have those on my channel. I have broken those down in different scenarios as well for sell high and buy low opportunities. Day 1 was a failed breakout at high or low of the week, and then you get a break-in structure as well. That is another different kind of scenario. So let's say we've been traveling down, and they make a failed breakout below the low of the previous week, and then they actually make a higher high. So that would be basically like a lower low and then a higher high. I am now looking for a buy low opportunity on the following day in order to get a reversal off of the low of the week, trend trade back towards the high of the week. And the same could be said for if it's coming off the high of the week. Same exact scenario, except they would make a lower low and then a lower high. Day 1 was a failed breakout at high or low of the week. Again, you get a day 1 3-day cycle, but then it turns into a trap, and that has actually happened a couple of times this last week on gold and a few other pairs. So we'll talk about those in the rest of this video. The first scenario being, after you get a day 1 of the 3-day cycle coming into day 2, did I have a signal day? So for example, we have a day where they have broke out at the low of the current week, and then that breakout has failed, pulling back up into the range. Day 1 3-day cycle, if you're confused about finding day 1, watch my previous video. It's called something along the lines of finding day 1. And then on this following day in Asia, you can see Asia is the opening range for the day. They break out, pull back in London, and then go into that nice parabolic channel, going vertical in the first hour of New York through the high of the current week. At that point, once they go through the high of the current week, the trade setup is over. The first green day trade is over. Day 2 3-day cycle has been complete. Something very important to note is that this does not have to always take place in the New York session. It could happen in Asia. It could happen in London. It really depends on the pair and when that pair is used to moving. But of course, any pair can move in any session if it is set up correctly. That next scenario being whenever you have a day 1 of the 3-day cycle that also breaks structure in the same day. These are both very good high quality setups, the one from the previous slide and this one, because you have a signal day and structure on your side. So for example, this was also a first green day as well. So lower low, higher high, break in structure back up to the upside, peak formation low, peak formation high, consolidation in the middle. There is that parabolic trend channel that we look for after getting peak formation low, peak formation high. Day 1 3-day cycle on this Friday. Day 2 of the 3-day cycle on Monday, also the opening range, going vertical back through the high, not only of Friday, but it looks like it went back for the high of the previous week as well. There's multiple confluences with this. You're trading away from the peak formation. So peak formation low, they spike, they make a higher high, and you can very clearly see the 3 pushes back down into the low, 3 pushes into the open of, or the end of London, and then there's the channel. Stop hunt to the high of the channel, getting people to go long early, stop hunt to the low of the channel, stopping out the longs, and then also triggering shorts into the market before going vertical in its intended direction. From the inside back towards the outside as a trend trade back towards the high of the previous week. Market is not cookie cutter. You're not going to get the same looking candles every single time, even though you will start to notice reoccurring patterns that show up over and over again. However, the scenarios of what is happening within the market do happen over and over again and will look exactly the same because it is about whether or not the scenario actually played out. Was there a failed breakout? Yes or no? That's very easy. Yes. Okay. Day 1 3-day cycle coming off the high of the week. Then I look for the pattern. Was there a first red day or a first green day? So looking at this example here, This is the high and the low of the previous week. This was Tuesday. This was Friday. There was a holiday, so there was no Monday. Same thing with the following week. All right, so we had a very large pump up, day one, 3-day cycle, and a first red day on this Thursday. And then you get Friday breaking the low of Thursday, and then it doesn't really matter because coming into Tuesday, first day of the week, they attempt to go higher back outside of Friday's high, and there's a breakout that fails. Day one, 3-day cycle in a down moving market, when there was already a break in structure to the downside as well. There's been a lower low put in place. They've pumped it back up into the high, putting in a lower high, and then continued to dump down lower. So on the following day, Asia pumps up, goes into consolidation at the high of the day, lower low, lower high, and then breaks down in the London session. And you can see exactly what I'm talking about. On day two, I am trading away from this peak formation in the direction away from that peak formation. There's volume trap now at the high of the current week, and they are expanding the range on Wednesday outside of the previous day's range. So basically an opening range breakout. So like I said, not cookie cutter. It's not always going to be the same. However, the scenarios remain the same. So if you're getting multiple day one, 3-day cycles and it continues to make lower lows and lower highs, that is probably telling you something that you need to be very careful about the trap. Look out for the trap. Look at this. Day one, 3-day cycle on a Tuesday, failed breakout below Monday's low, comes back into the range. Following day, failed breakout, low of week, pulls back on the inside of the range. But look, lower lows, lower highs consistently. They are pressing down towards the low of the week and building up a coil in order to go vertical down. You have to be careful. Look, new day opens up and you're thinking, okay, time to go long. Think about all the other examples that I just showed you. Does this look anything like those? No. In those other examples, Asia or London has made a new extreme. So in this example, like Asia would have made a higher high. Maybe London pulls back and then goes vertical, or Asia creates the opening range for the day. London breaks out, pulls back. New York vertical move on day two of the 3-day cycle. This is a very different scenario. Asia creates the opening range for the day and is going lower, making lower lows and lower highs, and then continues to break out into London. It is in free fall mode, making lower lows and lower highs with this built-up descending triangle. That is a very large pattern that is built up over 3 days. That's a 3-day setup. Day one, and then you just question mark yourself as you watch it go straight down because you're expecting the higher high, but they never gave the higher high. They were only making lower lows and lower highs, so structure is always very important to me. So although that is a day two trap, it could also be an early warning sign for reversal. This is the same chart, but the week following where they had those two day ones in a row, trying to get longs to go long, trying to get longs to go long, and then dumping down. Now they're inducing shorts. They're getting people to go short. Following week opens up, and then you have peak formation low, peak formation high towards the end of the week. Inside day on a Monday. Inside days can be either trend continuation days or pause days for a large reversal on the following day. So peak formation low, peak formation high, consolidation in the middle, and then you can see the ascending vertical move over here within that actual inside day, but then it turned into an inside day. So there was no follow through, which means it could be a pause day for the next day. Asia, opening range for the day, very wide. Then it breaks out coming into the London session and goes vertical back towards the high of the week. The high of the previous week was the draw on the money. They were going back for the money. This is a great day two trap from last week on gold where there was a failed breakout at the high of the current week, giving you day one, 3-day cycle. Now I'm going to take note of a couple of things. Number one, there was no lower low put in place. So we already have discounted that fact, right? There was no first red day. All right, this is where the day opened. This is the peak formation at the high of the day. This is where it closed. It closed as a green day. On top of that, Asia, the opening range, starts making higher highs. So Asia, and then it broke out of Asia, pulled back in London, and then there was a trend trade back towards the high in New York, and it just goes into consolidation back and forth, dumping back down into the low. But this is a short squeeze pattern to go vertical back through the high of Friday. So think about what it should have looked like based off these previous slides. Go back in the video. Look at all the day twos that actually played out. Asia makes the opening range, and then there's expansion or a low of day trade within Asia's consolidation, either in London or New York, to go vertical back through the high or the low, depending if it's a first red day or peak formation at the high of the week or a peak formation at the low of the week will determine the direction that I am looking to go. Unless this scenario presents where I could catch the squeeze, and then I will take the trade in the direction of the squeeze. But this is a great example of day one, 3-day cycle, first red day, and then the follow through on the next day. So look at this. Asia, opening range, London makes a lower low and pulls back into New York, pinned to the high, vertical move back down through the low of the day. You're going to see that this was the 10 o'clock news candle, and that candle opened up at this level right here. And then it went 3 levels of rise. Level 1, level 2, level 3, 25 pip extension with an M at the high of the day. After a 3 peaks pattern, this is the first hour high, this is the second hour high after 3 levels of rise. There's an M at the high of the day. It breaks down coming into the third hour. The breakout of the first and the second hour fails and goes vertical after 3 levels of rise, back down to where that pump began at 10 o'clock. Entries, entries, entries. Do not complicate the entries, all right? I promise you it's really not that hard. What I've done for myself is I have created my own entry criteria, which we're about to look at right now. So like I said, do not complicate it. Let's do it step by step. So number one, you need to identify a higher time frame setup. These are coming from the 15 and the 1 hour charts. I am not just down on the 1 minute chart going, ah, yes, this looks like a great setup. No, it's coming off of the higher time frames. I am taking trades based off of higher time frames, just down on lower time frames. So over here looking at Thursday, Friday, this was the end of the previous week, Monday, Tuesday, Wednesday, and you can see now that we have a failed breakout at the high of the week. Again, learning how to identify day one of the 3-day cycle. We had day one, 3-day cycle down here on Thursday, failed breakout at the low of the current week and where the pump has began. They run it back up to the high of the current week. Day 2, 3-day cycle. They're holding it up above Thursday's high. Day 3 was an inside day. Day 3 cannot be an inside day, and it moves over to the next day. This was a repeat of day 3 after an inside day. Now we get a bit of a first red day here. Day 1 is, or it's going to become day 1 at the close of this day. Day 1, 3-day cycle. Following day in the direction of the peak formation. This is all a peak formation at the high of the current week. Volume trapped. I am trading in the direction after first red day, back down towards where that pump began. Push 1, push 2, push 3. This is an hourly chart, so that is push 1 hourly, push 2, push 3. Beginning of the New York session, 8 o'clock opens up, goes vertical back down, and we can look at the actual entry right here where there was consolidation, a lower low, getting people to go short early, triggering people in, and then stopping them out. They go vertical, hitting the stops on the shorts, getting people to go long, and then it reverses back into the inside of the consolidation. That is peak formation low, peak formation high after making a lower low at the high of the current day. And then you get the little descending triangle. It breaks down. That should have been your first entry in the first hour, and then it continues to make lower lows and lower highs until it gets back to that level right there. That's where I would end the trade setup. There might be a 25 to 50 pip extension outside of that. It might even go 3 levels outside of that. However, whenever it hits these levels, this is like my little magnet, and I'll usually just close the trade. So a review of what I just talked about. I have a higher time frame setup, and then I am looking at the timing. I have to be in my session window. It's either a first, second, or third hour trade, and then there has to be no news left on the calendar. I wait for all news events to play out before I am eligible to take a trade. Step 3, entry criteria. My 1 minute chart has made a high. The 1 minute chart break in structure to the downside. 3 pushes back into the high, M engulfment, and then my entry. So you can see lower low, 3 pushes back into the high, breaks down, makes another lower low in the first hour. Then you give 1 push, second push, third push, up, down, up, and then that is the engulfment down of an M. Also the descending triangle down for that first entry, and then the add-ins can follow.